Hi everyone, good morning and great to be here. I'm very excited to be here with Immad Akhund from Mercury CEO and founder, and Elizabeth Yin, co-founder and general partner at the Hustle Funds. So great to be here with all of you. So I guess we're in a new era of founder-VC relationships. Hopefully you guys get on, I assume. There isn't a lot of tension in the relationship.
We throw some chairs at each other every once in a while.
Okay, good. So just to kick off, the Hustle Fund, this is a fund that was founded in 2017. So really, you've just been part of a bull market from 2017 all the way through 2021. And if you look at the Crunchbase data set, even into the first half of 2022, things were pretty strong. And then there's been a massive sort of reset from the second half of 2022. So we're almost 8 quarters into this. So that's quite sustained at this point. So I'd love to know, and Elizabeth, your firm's done around 500 investments.
That's right.
Yeah, pre-seed, 3 funds in. You just raised a fund last year, is that correct?
2 years ago.
2 years ago, okay. And how large was that fund?
About 46 million.
Okay, okay. So that's a lot of investments for 46 million, or 3 funds which are on the smaller side. So I'd love to hear from you, just because you're out there, you're investing so aggressively. What has been different for you in 2024 compared to 2021?
Actually, this might sound trite, but very little. We continue to invest in companies globally. We're very active. I know a lot of people have pared back, but we average about 7 investments a month, sometimes more, obviously depending on what we see. And we're investing globally. So I think at pre-seed, actually, I would say that's probably the least affected stage because, frankly speaking, when valuations went really high in 2021, it was, from all these people pouring in tons of money, but at pre-seed, there are not a lot of investors who want to be investing pre-revenue in a half-baked idea. And so that's where we've always played and continue to play, and it's been largely the same.
Got it. And do you have a sense out there in the market, do you think there is a lot of startup formation in this period of time, or do you think that's slowed? And it's very difficult. We can see funding has come down. You're right, in our data set, seed, even though it's come down, is the most robust funding stage. And every investor I talk to, they say we're going towards seed. So seed has been a little bit more, actually a bit more robust, even though it's down. So do you think there are a lot of startups coming out in this phase, or do you think it's pulled back because it's a harder environment?
I think if it's pulled back, it's largely pulled back from, I call them entrepreneurs. I think in every market, you always have a lot of great builders who legit want to build their startup regardless of what everything is happening in the market. So, that is why we've continued to be very active, because we see great companies.
Got it.
Okay. I think if you look at the data, I think Delaware C Corps are being formed at an elevated rate ever since COVID. There's a lot of talented people that are getting laid off. In many ways, I think it's much better to build a startup in this environment than 2021. It's much easier to hire people. You don't have as much competition. AI is a big kind of sea change in 2021. There wasn't actually apart from lots of money being available, there wasn't necessarily like a kind of tech super cycle to ride. So, I mean, both Mercury data and the data out there on company formation, actually, I would say it's just as active. I expected a slowdown, but I haven't seen that much of it.
Yeah, that's interesting. So going to Mercury, you have, you've been in the growth at all costs. You raised a huge round in 2021 as a company. You're also, 2017 is when you were formed. And Mercury is banking for startups, and I think you're also going into personal banking services. So you would have obviously, been able to step in and help when the SVB collapse happened just over a year ago now. Yeah, but I'd love to hear from you, just in terms of your investors. Has the message from investors as a company, a growth stage company probably, well, you're Series B, changed from what investors said to you in 2021 to what they're saying to you now? Has that story changed?
I'm probably a little unusual. I've been doing startups since 2006, so I've always been anti this growth at all costs idea. I think startups are all about momentum. You have to be growing. I mean, I think if you look at it, especially from a pre-seed investor, so I'm an active investor, it is so absurd when a founder comes to you and says, I'm going to make a unicorn, right? They're saying I'm going to go from $0 in revenue, I'm going to be making 100 million in revenue in any short of time frame. It's kind of a crazy statement. But people do it, and that is what investors are betting on in Silicon Valley. But the only way you do that is by growing and having this continuous momentum and compounding on that every year. So, I mean, that's just the game that you're in. If you're growing like 30%, you're not a startup when you're small. I mean, when you're big, you can grow 30%.
Yeah.
So that is like the fundamental game, but like it has to be growth that's like scalable and at good unit economics. I'm also an active investor. I remember this pitch from 2021 where someone was like, I'm selling this thing. I'm like, okay, what's your cost of goods sold? All that. They're like, yeah, we're down to about 6% margin. And I was like, okay, what about like marketing? And it's like, oh, 0%. What about like cost? And literally it was minus 6%. Every time they sold a thing, $100 thing, they would lose $6. I was like, why are you doing this? But
Yeah.
I'm pretty sure they raised around.
But that, I mean, I think that can be an early stage, and then you've got to trigger it up. That there might be more costs early on.
It was,
so I guess,
it was not believable.
Okay, all right, okay. So how did you get to profitability because you said you're profitable as a company.
Yeah.
You're still fairly early in. You had the huge funding round in 2021. So how did you grow your metrics in appealing to startups? How did you do that as a company?
Yeah, I think if you look at the biggest cost during this time, it was like grow at any cost kind of thing. It was, you had a product and people were putting a lot of money in sales and marketing, right? It was like, hey, in order to grow, it used to be that you would spend like 1 year of like the customer's lifetime value on like advertising or sales. Then it became 2 years, and then it became like whatever it takes kind of thing. I have never thought too much like that, and especially for Mercury, we've grown a lot through organic and word of mouth. So, half our customers have, at the start it was even more, but now half our customers are organic and word of mouth. A lot of others are through partnerships and other things that don't cost us that much money.
Got it. And what do you do for startups that makes you compelling as opposed to as a standard bank, a regular bank?
It's all online, so you don't have to talk to anyone. You don't have to go to a bank branch. As a startup founder and engineer, I really hate talking to people, so that's a big draw by itself. But then it's just like we understand startups, and we built a lot of products that's specifically for them. So you can close a safe financing all through Mercury. You can invite your bookkeeper, and there's special controls for that. So we've built a lot of products and been very product-centric in a way that's like was completely lacking in this kind of startup banking market.
And one other quick question. So did the collapse of SVB, did that, I know that you got a bunch of customers would have come to you, and I think you have numbers around what that is. Did that change the trajectory of your company, or was that just more of a blip? Because I know in COVID, we've all been told, oh, it was a blip, and then things have kind of gone back. So
yeah, I mean, within about basically like 5 to 6 days, we got about 2 billion in deposits and like 8,000-ish in customers, which is nice. But SVB,
and you could handle that?
Yeah, we were ready. We already had 100,000 customers, so actually as a scale, it wasn't that much, but these customers were kind of bigger than average. But SVB was our main competitor, and they were like the 800-pound gorilla. Like when we started Mercury, it was like SVB was like in the competitive slide, like that was SVB basically. So now that they're gone, their market share, I would say, has shifted to us, and there hasn't been that much alternative. So at least at the early stage startup space, it was like either Mercury or SVB before March 2023, and now it's much more just Mercury. So we've definitely seen like a pickup and like kind of sign-ups and other metrics.
Got it. So I'd love to know, I was at an event last night that Microsoft was hosting, and there were a lot of founders there, a lot of female founders, because that was the focus of the event. And a lot of them that I met last night were bootstrapping, incredibly courageous and out there and talking about giving each other advice about what to do in starting their startups and what was important. So I guess I'd love to know from you just, if you're that kind of bootstrappy startup, you're getting started, you have your co-founder, you've built a prototype, which is what these founders had already done. They're not quite at, maybe they've taken a bit of angel money, they're not quite at seed. What is it that you look for in a startup that can sort of guide some of these founders? Because for some of them, a few that were in their 20s, this would be their first time around. A few had done it before. So what are you looking for at the pre-seed stage?
Yeah, it's a great question. I think there are a couple of things. One is what is it that you're actually building? And then the other is, what can you do? So I think what isn't talked about is there are certain ideas that are, quote, more fundable than others. So as an example that everybody in the audience knows, like AI is really hot. And some things come and go, and some things become really hot. And if you're in a hot trend, it makes it easier to raise money. Of course, not everything is hot all the time, right? There'll be a point in time where AI is not hot, and it'll be really hard to raise in AI. So I think there are certain categories of products that are just honestly really, really hard to raise for. So like an e-commerce company is really hard to raise for. And so there's only actually so much you can do that will make it easier to raise VC money if you're working on an idea that just fundamentally people are not interested in. It's a whole nother discussion as to how we can, address that, but that is something that happens. And then in terms of, all right, what can you do if you're in an area that investors are interested in? At least for us, we care a lot about differentiation and really understanding your customer. I think what distinguishes the ideas that we back versus others that we don't back, in spaces that we're interested in, is like, has the founder done a lot of conversations with customers? Like, do they really understand the day in the life of the customer? Do they really understand the nuances of the problem they're trying to solve? I think if you just, think of an idea tomorrow, then, maybe you don't have that level of understanding. So even though we're backing founders who are pre-revenue, we do care a lot about your understanding of what is it you're trying to do here.
Got it. And is this is pre-seed, how big are the checks at the sort of pre-seed level?
Yeah, these days we're writing 150K checks.
150. And are you doing party rounds, or is it you on your own, or what is that?
We don't care if other people are in there. We're often first check in, certainly in the first round. Obviously, most founders want to be raising more than our check, and so we do help our founders raise more money, but we can't guarantee that other investors will come in. Sometimes that happens, and that's great, and sometimes it doesn't, and we're lone rangers in it.
Got it. And is this the riskiest stage to invest? Pre-seed? It looks to me like it is, because
I think a lot of people would say that, but one of the reasons why I invest at this stage is I think from a risk to reward ratio, it's actually one of the best, because I think there's this perception that I actually think is incorrect, is that, seed stage or even pre-Series A or even Series A sometimes, a lot of people think, oh, there's traction, there's data, it's less risky. But the reality is most startups at seed and pre-A and even the A, they don't have product market fit. Maybe they do have some sales, but they don't yet know the repeatable process for getting their customers. They may not fully understand the nuances of their customers. There's still a lot of figuring out to do, and that's fine. But I guess what I'm saying is I think anything pre-product market fit is in this bucket of risk. And so I would like, the reason I invest at pre-seed is I would like, to invest where the reward is greatest in this bucket of risk.
Got it. And do you compete with accelerators? Because they're kind of doing that sort of size.
There are certainly a lot of, firms or people who are doing this kind of investing, but I think there is so little capital at this stage that I can't even think of when we were shut out of a round. Maybe in some of the frothier years that applied for like a serial entrepreneur working on something, but for the vast majority of companies, we would actually just love to have more people.
Yeah. Okay. More money at the
More
seed
money.
stage.
Yeah.
So, Immad, you're an active angel investor. So, any advice? I know you're doing a lot of angel investing, from what I could see. So, how do startups find you? What should startups think about when they're raising angel investing?
Yeah. I still do about 30 per year, so I guess that's pretty active. And people can just DM me on Twitter, or ideally get an introduction from someone. Between all my investments and other things, I'm fairly easy to get to. I'm a real market-focused investor. There's different kind of takes on investing. I really want to really believe that this thing will exist and be huge. Ideally a $10 billion company in 10 years. So that is my focus. I'm also kind of, on the investing side at least, interested in crazier things. So I did a semiconductor company recently. I've done a bunch of space companies. It's just, I do a few fintechs, but I already feel like I know a lot about fintechs, and I enjoy learning about kind of new spaces. And,
got it. So crazy out there. So, and you also have a program through Mercury, is that right, for startups to help them?
Yeah, we have a program called Mercury Raise. and that's both for customers and other startups. We help them connect with other investors. So you can apply to the program. If you get selected, we'll help make introductions to relevant investors. And we have about 500 kind of mostly seed stage investors in the program.
Got it. Okay. So Elizabeth, one thing I'm noticing just in our, everything, as I said, is down across the board. We know, when I go out there and speak to investors, they say this is a tougher environment for founders. I have a friend recently who was out there with traction, raising a Series A. The terms were so onerous, they decided to sell the company and successfully sold it at a good price. So they did incredibly well. So I'm just wondering, are you seeing for founders, founders who come through your sort of pre-seed, are you seeing the avenues to get funding post-pre-seed? Is that happening for founders? Has that become a lot tougher in this market?
I think compared to 2021, it is harder to raise. But it is still a very active market. I mean, I started my company in late 2008. So compared to late 2008, this is a walk in the park. There are a lot of investors. They are active. It's just, I would say that if you're not in a hot space such as AI, it takes twice as much time to get a round done. And, the valuations maybe a little bit lower. But actually, I would say pre-seed and seed, I'm not seeing too much movement on valuations either. So it's basically just a little bit slower. Yeah.
I would say pre-seed and seed have been okay. But last year, Series A was dead.
That's true.
I talked to many VCs saying the only thing they would touch is AI companies. So if you weren't a hot-ish AI company, Series A's were dead. I think Q1 this year, it's picked up a little bit, but it's still for Series A, it's still very AI heavy. And I had a company that I invested in that's like growing like crazy, would have been a really hot round in 2021 that has like completely struggled to raise a Series A because it's not an AI company.
Yeah, and we're seeing the same thing in our data. We did analysis on the 2008 downturn, and we saw, and that was a very different market. Seed was a new sort of set of the market that had sort of come out in 2005, but we saw everything move towards Series A. Series A was smaller in that market, but that's where the market shifted, and Series B's kind of lost out. And when we look at the data now, we've seen things shift to seed, and really Series A has been incredibly slow, which surprised me. I thought Series A would be, that's where the first money comes, the big checks come in, and you're doing product market fit, and there'd be more. So it'll be interesting to see going forward what that's going to look like. So we're almost at time. I don't know if you have any final thoughts. I did have one question, which is, it's tough for founders. Are seed funds shutting down as well? Are you seeing that happen?
Oh yeah, I think people forget that it's tough all up and down the stack to raise money. So, I think part of why it is harder for founders to raise is that there are fewer investors, and that's because it's harder for investors to raise as well. So, but I think it is starting to actually come back, and I am seeing some, even later stage rounds getting done, but definitely slower.
Yeah. And Immad, for you, are you going to raise again? You've raised more than 150 million. Are you raising again ever? Are you done? What are your plans?
We're profitable, and we've got more money than we've ever raised in the bank. So there's no rush.
You're not tempted to go public anytime soon?
Hopefully soon, but not imminent.
Yeah. I think there are a lot of startups in your position, and congrats on the profitability. So thank you all. Thanks, Elizabeth. Thanks, Iman. This has been great.
Yeah, thanks for having me.
Thank you. Thanks.